Welcome students to another lecture in the series. Let us move towards the next topic from budgets and budgetary control. For today, I have chosen the topic responsibility accounting. This topic has many a times been a part in your exam. Short notes are being asked on this topic. Let us see what responsibility accounting is. See, it is one of the basic components of a good control system. The main characteristic feature of this control system is that it is relevant to the measurement of performance of divisions of an organization. While other control systems are applicable to the organization as a whole, it treats each and every division as individual and check out the performance of each division. So this maximizes the efficiency, right? Budgeting and variance analysis, basically the standard costing, are a part of responsibility accounting process only, and it has close links with the size of organization, and it has no scope in small organizations. Why? Because uh, small organizations may take all decisions at a one centralized place, and they may not have the distinguished departments or the divisions to work upon. So slowly when the companies grow in size, so they tend to decentralize, because decentralization for large and diversified companies is considered to be a good option, and it is necessary for their better management. So, in big and diversified companies, like if I give an example here, like Hindustan Lever Limited, Reliance, ITC, they produce and sell a wide variety of products and services. So, responsibility accounting proves extremely useful. Because of the complexity of operations in such companies, it is difficult for the head office to have a direct control on the operations of all the divisions. So it is actually suggested um, to divide the company into separate self-contained divisions and allow the divisional managers to operate with their own independence level. Okay. Like if we take the case of ITC Limited, which is in the business of cigarettes, hotels, packaged foods, branded apparels, FMCGs, and information technology even. So, in applying responsibility accounting to such a business model, each hotel manager may be asked to run the hotel as an independent unit, like a small business, and each hotel will then be treated as a responsibility center. Similarly, the cigarettes business or the other business may be decentralized and may be converted into responsibility centers. So, in this way, a number of responsibility centers will be created for each line of business, which would promote the long term interest of the larger organizations and would coordinate their activities with other responsibility centers of the company. Now let us see how it is being defined by the experts. It is the method of accumulating and reporting both budgeted and actual costs and revenues by the divisional managers who are responsible for their own division. So it means in responsibility accounting, costs are identified with the persons rather than the products or functions or responsibilities assigned to that manager who is best placed to effect the control. So the idea of this form of accounting is that the managers will be held responsible for only for those items over which they can exercise a significant amount of control. A manager should also not claim credit for those revenues which is not the result of his action and performance. Like if we can have the definition quoted by Horngren, it is like a system of accounting that recognizes various responsibility centers throughout the organization and reflects the plans and actions of each of the centers by assigning particular revenues and costs to the one having the pertinent responsibility. So, this form of accounting refers to a system that reports how well each manager has fulfilled the responsibility which is assigned to him for his own division. If I move forward, let us see the prerequisites for responsibility accounting. It has certain assumptions. So, the assumptions of prerequisites: first, that it should be a big company which can follow decentralization, which can have divisionalized organizational structure and where areas of responsibility are well defined at different levels of organization. Second, that there are clearly set goals and targets for each responsibility center. Managers actively participate in establishing the budgets against which their performance is measured. Accounting system generates correct and dependable information for each responsibility center. The managers are held responsible only for those activities over which they exercise significant degree of control. Then managers must try to attain the goals and objectives. as per the responsibility accounting because they need to report for it. Goals for each area of responsibility should be attainable with efficient performance. Performance reporting should be timely and should contain significant information relating to the responsibility center. So these are the certain prerequisites or assumptions that we need to follow while practicing responsibility accounting. Then next, before going further, we need to define what a responsibility center is. Till now, you must have got an idea that the whole divisionalized structure would be considered as a responsibility. If we look for a bigger company Procter and Gamble or ITC or Reliance, you would see that they do have their factories and offices all over the country and even beyond. So in that case, it can be divided area wise or can be divided as per their different levels like production or other sort, or maybe divided as per their line of product. So there are many possibilities. So the basic idea of responsibility accounting is that the large diversified organizations are difficult and if not impossible to manage at a single segment. So thus they must be decentralized or separated into smaller manageable parts, and these parts, small parts, are only known as responsibility centers. So if I define it in the words of CIMA London, it is a division of the organization for which a manager is held responsible. Okay, and CIMA London has defined it as a segment of the organization where an individual manager is held responsible for that uh, particular organization, that particular part, and its performance. We can have other definitions also from like Hongren. Our responsibility center is a part, segment, or subunit of an organization whose manager is accountable for a specified set of activities. We can have an example here, like if a company is running a chain of hotels, so maybe one hotel whose manager will be accountable for its performance. A responsibility center would act like a small business to achieve the objectives of a larger organization. So for an organization to be successful, it is necessary that the activities of the responsibility centers are coordinated with each other. An important criteria that we need to keep in mind is creating responsibility centers is that the unit of organization should be separate and should be identifiable for the purpose of its performance evaluation. Means it should be separate from the others. It should be understood that for creating these kind of responsibility centers, it is not necessary that the organization must be decentralized, because responsibility centers can be found in both centralized and decentralized organizations. Then next we do have types of responsibility centers. Here we have four types. First is cost center, second is revenue center, next is profit center and investment center. These are those same concepts only that we have almost studied in the cost accounting as well. So first, cost center as per CIMA London, the definition looks like this: a production or service location, function, activity or item of equipment whose costs may be attributed to cost units. So basically, a responsibility center is the cost center where the manager is accountable for the costs that are under his control but not for its revenue. Only those costs are charged to that particular cost center which are controllable by the manager of the cost center. Like the maintenance department of a hotel may be a cost center because the maintenance manager is responsible only for the costs. Okay. The next is revenue center. A responsibility center is a revenue center in which manager controls the revenues but does not control either the costs of products or services or the level of investment made in the responsibility center. Revenue center may control selling prices, product mix, and promotional activities to enhance the revenue. The sales department of that particular hotel will be the revenue center because it is responsible only for revenues and not for any other parts like costs also. Next is profit center. As per CIMA, we do have its definition as a part of business accountable for costs and revenues both. It may be called a business center because a business unit or a strategic business unit. This is so because they are responsible for the accountability of costs as well as revenue. So a responsibility center is a profit center where manager is accountable for sales revenue as well as the costs. So the difference between those two will give the profit. A unit of company is a profit center if it is responsible for sales as well as production in that unit. The hotel manager would be in charge of a profit center because he is responsible for the revenue as well as the cost. A profit center is simply like an independent business, except that the senior management in the head office control the level of investment in that particular responsibility center. Most individual units of chain operations, whether they are restaurants, hotels, motels, stores, they're treated as different profit centers. Manager of a particular profit center would be obviously aiming to maximize the profit by making decisions relating to the production volume and other things like product mix, production technology, selling price, marketing strategy, discount, credit policies, etc. All these are taken into consideration at the profit center. The last is investment center. As per CIMA London, the definition here of investment center is that a profit center whose performance is measured by its return on capital employed. So, thus, a responsibility center is considered to be an investment center where the manager is responsible for sales revenue, costs, and in addition, he is having the responsibility for some capital investment decision also relating to the working capital management, capital structure, as well as capitalization. So, his performance, if we see of all these centers, it is having the widest scope. His performance is measured in terms of profit as related to capital base. So investment center is also like an independent business where even investment decisions are made by the manager of the division. If we can continue with that same example, a new hotel, suppose, being developed by a company, would be an investment center if the manager is responsible for the investments in the hotel project and also for its costs and revenues. So the difference between the investment center and profit center is that an investment center adds responsibility for the investments to profit center responsibilities along with the profits and other things. So the objective of the responsibility accounting is to accumulate costs, revenues for each responsibility center so that variances from budgets are attributed to the manager concerned. So it is implemented by issuing performance reports at frequent level intervals that inform the manager of the responsibility center regarding the variances between the actual and the budgeted results. So they take the remedial actions accordingly. If you have any problems related to this topic, you may write to me. Thank you.